Let's take a look at gold again today. Um, I was thinking that this might turn out to be the daily cycle low right here, but as of today, and I'll show you why here in a minute, I kind of doubt it. I think this is probably a little bear flag, and we've got one more lower low before we get a more sustained bounce, something that's lasts 8 to 12 days. With the FOMC meeting next Wednesday, I believe it is. My guess is we're going to probably come down, make a lower low below this pivot, and get our daily cycle low maybe a day before or on the FOMC meeting. And then we get another bounce. Might not be able to get back above the 200-day moving average. And then what I believe will be I think that'll be the third daily cycle. We'll probably left translate, come down, and then my best guess is that it's going to make a marginally lower low below this intermediate cycle low right here. So here, of course, is the problem. This is a little bear flag in silver, and it broke down this morning, made a lower low. So silver's probably leading, and gold is probably going to follow. Silver has made a lower low. You can see here we got a rally, a corrective move, another rally, and then we've started down and we've made a lower low. That's almost always a bad sign. It means that the intermediate cycle has rolled over, and now we're in the declining phase of the intermediate cycle. Same thing for mining stocks. You can see they've made a lower low as well here. Again, this is probably some kind of little bear flag, and the miners are going to come down and make a lower low between now and probably, like I said, the FOMC meeting. Let me go back to gold. And then let's look at the weekly chart. So we're still in this handle from this cup and handle pattern. We had a chance that maybe the handle was done and we were ready to rally again right here, but then we got that big attack after the June FOMC meeting. So gold has just been going down, and now I'm just mostly churning sideways. And I'm pretty much convinced at this point that it's in the declining phase of its 8-year cycle. So we're just not going to get sustainable rallies until we finish that 8-year cycle low. My best guess is mid to late next year, we'll get that final 8-year cycle low, and then we'll start to get some sustainable rallies that are making higher highs. Right now, you can see each one of these intermediate rallies is making a lower high. So here was a intermediate rally, did not get above this pivot. Another intermediate rally, not able to make a higher high. Same thing here. Pretty much convinced at this point that this intermediate cycle's topped. Well, I am convinced. And it was not able to make a higher high. So it's at some point, like I said, we'll get a convincing little bounce. Actually, let me go back to the daily chart. We'll get a convincing bounce, 8 to 12 days, and then that cycle will left translate, and we'll come down and I think at least test this pivot, probably make a marginally lower low. Now let's go back to the weekly chart, because this is the 200-week moving average, and I doubt that we're going to complete this 8-year cycle low until gold either goes sideways long enough for this 200-week moving average to catch up to price, or more likely we're going to go sideways and then down and test this 200-week moving average sometime mid to late next year. And we might even go as low enough to test that 1550. That's kind of a major support and resistance zone. That's where the first leg down in the bear market bottomed at about 1550. And then when that 1550 broke a year later, that's what ushered in the bear market. So that's a target zone. So, over probably the next year, you want to just be cautious. Intermediate rallies, probably not going to be able to make higher highs. And we're probably stuck in this very difficult churning sideways move until we complete that 8-year cycle low. All right, so going back to the daily chart, just be aware that somewhere here we're gonna get a bounce, but you don't want to remain on the slope of hope. We're already making lower lows in silver and lower lows in the mining stocks. There's just really no doubt at this point that we're in the declining phase. So don't listen to the analysts that are telling you that gold is going to go to the moon. It is going to go to the moon, but not until we finish that 8-year cycle low. And be aware that this third daily cycle, when it starts, I don't think it started yet, but when it does start, the rally is going to look convincing, and a lot of people are going to jump on the bandwagon. But that rally's is going to left translate and come down and at least test this level here, if not marginally break below it. So you don't want to get too trigger happy just yet. Probably mid-January, maybe even early February before we're going to be ready for another uh, intermediate degree rally, something that lasts more than just a couple of weeks. Something that might last a couple of months, but again, it probably will not be able to make a higher high above this pivot.